Welcome to this video, Dave, which is all about a key Forex trading skill that can lead you to success. All the great traders have this skill. I want to go through it, and I also want to profile one of the greatest traders of all time who perfectly illustrates the skill for me. He's not that well known, actually. His name is Arthur Cutten, and I'm just going to be going through his trading history in a moment. But first of all, what is the skill? The skill is neatly summed up in this quote, which is, if you want to achieve success, you need to have strong opinions weakly held. Now that quote comes from a guy called Paolo Soffo, who basically gives advice to businesses on how to achieve success. Now Forex is a business. That quote is extremely relevant. And Arthur Cutten illustrated the skill perfectly. What I want to do here is show you how you acquire the skill and why most traders cannot get it. They form opinions in the wrong way and they fail to change their opinions quick enough and end up losing in the markets. To become a trader who can change an opinion quickly and basically do the right thing, you need to be aware of how conditioning works in terms of the way we are conditioned as humans in terms of our behaviour, which I'll be going through a bit later. But first of all, let's have a look at Arthur Cutten. Who was he? Well, he came from Canada. He came to Chicago in the 1920s to trade commodities, and he came with $60 in his pocket. He made countless millions trading commodities. He then moved to Wall Street, and when he left Wall Street, he went back home with about $150 million in his pocket. So a really big fortune for the day. He didn't lose any money in the crash. He actually made money from it. And he was just a speculator who was extremely successful. And I was reading his rules for success that he printed in an old newspaper a while ago, and he misses out the one key skill that I think he had. But the skills that he thought were very relevant to his success were the following. Try and trade long-term positions as often as possible. I'd certainly agree with that. Look for overbought or oversold scenarios in relation to the fundamentals, when you've had a move too far from fair value. Accumulate your position, have the courage to run your profits. Now, that for me is all sound advice, but what I think Cutten did better than most traders was he knew when to get out and change his opinion. So he'd very often hold trends for considerable periods of time with big money on the line, and then he would come out, he would have what he wanted, he'd be gone. There'd be other times when he would actually just reverse his position from his previous opinion, and he'd do it under immense pressure. So to give you an example, he was 50 million down when Wall Street crashed. What did he do? He basically went the other way and sold. He got all his money back and a profit. He had that real flexibility of thought which we need as Forex traders. Now, a lot of people say, you shouldn't have opinions to trade the markets. That's utter rubbish. You've got to have an opinion to act decisively. If you've got a strong opinion, that means you can be decisive, you can pull the trigger, you can take the trade. The real key is to have that strong opinion. But when we say weakly held, what we're meaning is we're on the lookout for why our opinion could be wrong. Now, most traders don't understand that concept. Once they've got an opinion, they stick with it too long and they end up losing in the markets. They do not understand conditioning that all humans are subject to. Now let's give you some conditioning that we're all subject to. You can see why the problem occurs in most traders. Now, in terms of humans, we are basically prone to what is called mental inertia. Mental inertia is basically once you have formed an opinion, it takes a lot to turn that opinion around. You tend to stick with it. If you think about the opinions that you form in everyday life, it does in most instances, take a lot to turn them around. Well, in the Forex markets, you need to turn an opinion around pretty quickly at times, otherwise you'll soon be out the game. So mental inertia is a real problem. You've got to be very mentally alert of what could be wrong with your opinion. You need to question it. You play devil's advocate. Now, other problems we have in terms of our behaviour is we've got a thing within us called the confirmation bias. We don't like to be wrong. So if we've made a trade, okay, we want to basically confirm that our view is correct. Now, that is a real problem for most traders. You shouldn't be confirming why your trade is correct or looking for reasons, because then you just engage in wishful thinking. You know, just trying to confirm you're right, just trying to flatter your ego. What you need to do is basically confirm to yourself why your trade might be wrong. I mean, that is the more important thing to do. Okay, it's not such a great feeling, but you need to do it. The other thing that we have as humans in terms of behaviour is risk aversion. That in the Forex markets, this really comes into play when a trader has a losing position. Generally, traders do not see their losing position as a loss. They only see it as a loss when they bank it. Now, if you think about it, that is totally illogical. If you've got a loss in the market, it is a loss. Okay, I mean, you're going to bank a bigger loss if you see things in that way. Yeah, because what you're going to do is engage in hoping that your trade turns around to prove yourself right. Successful traders do not get involved in basically not seeing a loss as a loss until it's booked. I mean, that's just one of the most illogical things that traders do. We also have another bias which is called the outcome bias. We don't like to be wrong, and we actually assume, or a lot of traders assume, that they've made a bad decision if a trade goes against them. So they'll still want to hold it to prove themselves right. I mean, it doesn't matter in trading, does it? Any trade can go wrong. We just have to accept that. So in terms of strong opinions weakly held, you do actually have to have very strong opinions to trade. You cannot trade unless you've got a strong opinion. But you need to have that flexibility to change your opinion quickly. And as humans, we're not pre-wired to do that. And also, obviously, you've got to keep your emotions out of your trading, okay? And all the great traders, not just Arthur Cutten, have that flexibility, to basically change opinions quickly. They have that ability to see the reality of what is going on without biases coming into play. A lot of traders can cut their losses and basically be disciplined. The one thing I like about Cutten, and it wasn't the only time he did it, was when he reversed that position. His long position to a short position, and totally the other way. He did it with total conviction, and he came out with a huge amount of money. Now, in terms of the skill we've just discussed, basically having strong opinions weakly held. If you understand how we think as humans, and you really sort of study the areas that I've just discussed, the basic psychological flaws that we have, you can see why most traders lose. They don't even consider those biases, or they don't think them through. You do not fall for those biases, and of course then you can become a disciplined, a decisive trader and make a lot of money from the markets. And I think Cutten, what a wonderful trader, and he basically could do it all. He could trade long term, short term, he could trade commodities, he could trade stocks, and he always came out a winner. And I was reading an article on him, and someone actually described him as being a bit like a cat. Even when he had a bad position, he could get out, and normally he could make his money back. Just like a cat always lands on its feet. So that is the video for today. I hope you enjoyed it, and I look forward to speaking to you again soon. Take care. Have a good day.